Right now, international trade is grinding against a wall of geopolitical friction. Escalating trade disputes are fracturing the Eurozone economy, while rising costs for energy and resin-based packaging out of the Persian Gulf are squeezing profit margins worldwide. At the same time, the Federal Reserve is aggressively pulling back on its balance sheet. They are actively removing U.S. dollars from global circulation, creating a severe systemic liquidity squeeze across international markets. You would expect this dual shock of trade friction and a currency shortage to drag down global equities. Instead, the U.S. stock market is breaking every record on the books. The Dow just crossed 53,000, and the S&P 500 blew past 7,500. We are seeing an extreme disparity in currency strength. Because of the global dollar shortage, foreign currencies are being crushed. The Japanese yen has breached critical support levels, falling fast as capital looks for safer harbors. The constant pressure of global instability has triggered a capital cascade, a mechanical process funneling international wealth directly into American innovation. The foundation is domestic economic stability. This chart maps ISM Services PMI over 24 months. The services economy remains above the 50-point expansion threshold. Supporting layers reveal the mechanics. Employment metrics are rising, and businesses are passing price hikes to consumers without destroying demand. Because the domestic services sector refuses to crack, the United States operates as a massive financial safe haven. It is readily absorbing the flight capital escaping volatile markets in Europe and Asia. Once that global capital enters the U.S., it sprints straight toward the foundational layer of modern technology, the semiconductor sector. We're seeing massive, sustained rallies driven by legacy hardware players like Intel, Micron, and AMD. There have been recent warnings about potential AI overcapacity, especially as a few tech giants begin selling off their spare compute. But the assembly partners building these physical systems are reporting the exact opposite. The underlying demand for AI hardware is actually accelerating. As the primary architect of this arms race, NVIDIA is capturing a massive share of this incoming capital, pushing its valuation into the trillions. And this hardware ecosystem is actively expanding its reach across the broader tech landscape. Broadcom, for example, just extended a massive infrastructure partnership to supply critical components directly to Apple. The semiconductor sector is currently acting as a brute force engine. It is carrying the entire global bull market on its back, turning raw international capital into physical computing power. An influx of capital this large requires new frontiers to absorb it. We saw this hit an extreme when SpaceX went public, debuting with a staggering day-one valuation of $2.11 trillion. But the true catalyst for the market frenzy came from the institutions themselves. The NASDAQ altered its own long-standing inclusion rules, specifically paving the way for SpaceX to enter the NASDAQ 100 just 15 days after its IPO. This flowchart demonstrates the mechanical consequence of that rule change. With SpaceX in the index, trillions of dollars managed by passive index funds and ETFs are legally required to automatically buy the stock, siphoning massive capital into a single, heavily weighted node. That forced buying pressure is highly concentrated. SpaceX's total float, the amount of shares actually available for public trading, is heavily restricted by substantial insider ownership, most notably Elon Musk's 49%. They have built a permanent force multiplier into the structure of the market. What we are looking at in 2026 is a tightly closed-loop system. Global trade friction strengthens the U.S. dollar. Unbroken domestic stability attracts that foreign capital. The AI hardware race absorbs it. And then new index rules institutionalize those gains. This loop alters the basic mechanics of passive investing. Buying a standard index fund used to mean buying a broad slice of the general economy. Today, it equates to placing a heavily concentrated, inescapable bet on aerospace and artificial intelligence. The Dow's climb to 53,000 is the result of a structural absorption of global friction, creating a financial ecosystem that now depends on the unbroken expansion of the bleeding edge of human technology.